Erik, here's one thing I want to know. How do you persuade your clients, ensure that they believe you're working for them? Because you're in the position to marshal the flow of a great deal of money, and there's obviously a temptation there, and many consultants in your industry have succumbed to it. So what I want to know is, how do your clients know that you're working for them?
Yeah, very simply. I think you have to align all the economics the right way. So we're an employee-owned firm, and all of our revenue derives from our clients. Pure and simple, and it keeps that issue totally off the table.
And those clients being public pension funds?
Institutional investors, certainly a lot of public pension funds, but we work for Taft-Hartley plans, sovereign wealth funds, endowments, and foundations. So it's an array of all types of institutional investors.
When you talk to I'm sorry, go ahead.
In general, when you are looking at potential investments on the advisory front, is there a basic checklist that all of these organizations have to meet before you'll even consider them?
Absolutely. One of the luxuries of the private equity market is that you do have some time to make a decision. So we're not making buy and sell decisions today and tomorrow. We're actually doing due diligence on these fund managers over months. When you go and see a new client, is that one of the questions that continues to come up? It's been several years since we last saw sort of a fund consultant scandal, but like, how do you persuade me that you're free of conflict of interest? Yeah, I would say we have the luxury of a 25-year reputation, and so no, it's not a question that we get asked a lot, but it's certainly a question that I think for the smaller groups that are out there, our industry is still full of kind of mom-and-pop institutions, and so absolutely they get that.
But if I'm a pensioner, could I make the argument to the CIO running that pension, isn't that what we pay you to do? Why do they need you?
Well, I think the issue is 250 people and 11 offices is what we're bringing to bear, solely focused on the private markets. Even the large pensions who have big PE staffs, they have 2 people, 3 people. What do you make of the trend, though, that we're beginning to see some organizations like New York, for example, New York City, or San Diego starting to try and bring more of these capabilities in-house? I think they absolutely should if they can, and if they can get the right people and keep the people. Look, there's certainly a cost benefit.
I know we have to go, but what do you think about the fact, can these public pensions pay their employees enough to attract the right talent to run these businesses? When I look at the way they're compensated or what the per diems they're given when they travel, it seems crazy. How are they going to get sophisticated investors to take those jobs?
It's a real challenge, and you've seen it because the turnover, it's getting the people there is not the hard part. Getting them to stay is the real challenge.
Yeah, when you send them on business trips to New York, you know, and say, and you can spend $20 a day on all 3 meals.
It's hard. You feel, but it's very hard.
Erik.
Always a pleasure.
Thank you very much.
Thank you.
Love to have you back. Erik Hirsch is the Chief Investment Officer at Hamilton Lane.